Demand for labour seems to be picking up, as measured by surveys such as the one I used to run at ANZ and others. And we're also seeing, it would appear, some reversal in the trend on the part of employers to reduce hours worked during the downturn as an alternative to outright retrenchments, which is an encouraging sign. As I say, I don't think this will drive a boom in consumer spending, but it will help households sustain or keep up their capacity to service their mortgages. That won't be a problem for the resources sector, of course, most of whom commodity prices will be more than sufficiently high to offset the impact of a stronger dollar. But it will be a significant negative for other trade-exposed sectors such as agriculture, tourism, manufacturing, and these days education, which depends for a significant proportion of its income on foreign students coming to Australia and paying high fees. These are sectors that are going to be squeezed not only by the strong exchange rate, but by difficulties accessing skilled labour and finance, and by high interest rates, in order to make room for the expansion of the resources sector in an economy which, as I mentioned before, doesn't now have a lot of spare capacity in it. The Australian economy is picking up again after a milder than expected slowdown, a milder one than in almost any other advanced economy. We don't have a public debt problem that other countries have, although we still need to get the budget back into surplus as quickly as possible, not least so that we have the wherewithal to insulate ourselves from any future volatility in the economy as we have done here. We are running a large current account deficit that this year will probably go back to about 5% of our national income. But the key difference is that much of the borrowing which Australia is undertaking to finance that deficit is going indirectly to finance investment of the sort that has the capacity to service that debt and maybe even one day repay some of it. That, I think, is an important reason why the global economy, the global financial system, has allowed Australia to continue running large current account deficits, because foreign investors recognise that in lending to or investing in Australia, they're financing to a much greater extent than in other countries investment spending as opposed to consumption spending.